Hello everyone, my name is Ashutosh Kar. I'm a chartered accountant, certified public accountant from USA with a PhD in commerce. I've started this YouTube channel to post videos relating to US taxation for both individuals and for businesses. To start with, we'll be posting videos relating to US taxation for businesses. So without any further delay, let's start the video.
Chapter 2, Tax Withholding and Reporting. The first topic that we will cover under this chapter is self-employment taxes. Self-employment taxes are under Self-Employed Contribution Act, which is basically a social security and Medicare tax primarily for individuals who work for themselves. Income earned as an employee or as a notary are not covered under this. So the contribution is basically to provide coverage under the social security system, which primarily provide the taxpayer with benefits like retirement benefits, disability benefits, survivor benefits, and medical insurance benefits. Now the comes at what earnings you need to pay self-employment taxes. When the net earning from self-employment were $400 or more, charge employee income of $108.28 or more. The self-employed must pay self-employment taxes and file Schedule AC of Form 1040. So we'll be discussing about the forms in detail in another video. Now come the rate. The self-employment tax rate is 15.3%. It basically consists of two parts. One is 12.4% for Social Security and the other 2.9% for Medicare. Now let's understand the implication and how it's basically calculated. For 2021, a tax rate of 15.3% applies to the first $142,800, which is $147,000 for 2022. Any income over and above it, an additional 2.9% has to be charged. Again, for higher income taxpayers, an additional 0.9% of additional Medicare tax applies when income exceeds one of the thresholds based on the filing status. Like married couples, if they're filing jointly, the limit is $250,000. Married filing separately, it is $125,000. Single head of households or for qualifying widow, the limit is $200,000. Before applying the tax rates, a self-employed taxpayer reduces income from self-employment by the percentage of tax that employer normally pays for their employees. One of the major difference that you can see between self-employment tax and the payroll taxes is that the people with regular job, in that case, the typical employees and employer split the bill on Social Security and Medicare. It's like employer pays 7.65% and employee pays 7.65%. So if you put together 7.65 and 7.65, it's 15.3%. So in case of self-employed people, they pay both the halves. So that is the reason they pay 15.3% in comparison to the job holders. Now it comes to how you are going to pay the self-employment taxes. First of all, you need to obtain a social security number. If you don't have, apply for it and using the form SS5. You need to obtain an individual taxpayer identification number. If you are a non-resident and you do not have or you are not eligible to get a SSA, and you can pay the self-employment taxes with the estimated taxes. We will be discussing the payroll taxes in the next video in details. Thank you.
Hope you have liked the video. If you have any suggestions, feel free to share your feedback in the comment box. Looking forward to hear from you all. Thank you.